If the emphasis really is on value from the Chinese consumer, Starbucks is underperforming. What is that telling you about discretionary spending, Shaun?
Well, the value is the real term, and I'm glad that you brought it up. Chinese households are still sitting on 20 trillion US dollars of savings. It's all in time deposits. They're not putting money into the A shares. They're not buying real estate. They're just sticking it in and getting 1-2% interest rates in time deposits. But they still have the money. They're just not spending on certain categories because, as you just said, a lot of the big companies like a BYD, like a Xiaomi, like a Xiaopeng are discounting. So Chinese consumers are taking a wait-and-see attitude before they buy into most categories. But for some categories, they'll spend money, like sports apparel. You can see Hoka, Lululemon, On are all booming. Now, when it comes to Starbucks, I think Starbucks is making major strategic mistakes in China, and they've done so for the past 5-6 years, frankly. It's not because of the weak consumer spending. It's because they've lost their brand positioning. Starbucks used to be luxury in a cup. You used to go into Starbucks, talk to the barista, have a nice place to sit down. I used to see a lot of construction workers 20 years ago. They would line up and spend, 3 days worth of their salary to get a Starbucks cup, to get luxury in a cup and show the world they were sophisticated. Over the last 5-6 years, Starbucks remained expensive, but their outlets are terrible. I went into a Starbucks 2 weeks ago and 40% of the items on their menu, the high-end coffees, weren't selling. So it just was a really bad experience. And so what Starbucks is trying to do is they're trying to cut prices. They're trying to compete now on price against Manor Coffee, against Luckin Coffee, and that's something you just can't do. As an American company, you can't compete with Chinese companies on price. They'll go to lower margins. You see the CEO of Starbucks is making hundreds of millions of dollars a year. So how can they really compete on price? They need to double down on a more premium in-store experience, better coffee, and really regain that luxury in a cup feeling that they had a decade ago, Sri. I'm very bearish on Starbucks right now. It's terribly run in China. Hopefully, Hill House or Primavera or Fountain Vest, one of the big private equity firms, can buy them and have decision-making localized at the CEO position. And if a PE firm buys them, make me CEO, because I think I can turn around Starbucks in China.
You make quite a stark prediction. If Starbucks can't win in China, they won't be able to survive in America. What leads you to that conclusion?
Well, it's pricing. So I actually just arrived back from the United States yesterday. I was in Boston yesterday. And you see inflation is still a major problem, even though egg prices have come down, even though gasoline prices have come down. When I talked to Americans over the last week, the high price of everything was something that American consumers talked to me. They said they were worried about tariffs. They were worried about the uncertainty and the mercurial nature of Trump's decision-making. Nobody had any trust in Scotty B or Scotty Bessent to run the economy, so they're looking to save their dollars too. Now, Luckin, China's large domestic coffee company, has just entered the American market. And I think Luckin can do very well if they can compete on price against Starbucks, because the American consumer, just like the Chinese consumer, frankly, is hurting. The major difference between the two is when the Chinese hurt, they save. When the Americans hurt, they go out and spend on experiences and on alcohol to try to feel better about themselves.